Good morning, everybody. It's Monday, June 3rd, 5:25 a.m. Central Time. Grain markets are mixed this morning. July corn futures down 1.25 at 445. July soybeans down 10.5 at 1194.5. July Chicago wheat up 8 at 686.5. July Kansas City wheat up 8.75 at 717.5. July spring wheat up 9 at 748.75. The corn market was ugly last week. Let's start there.
It sure was. The December 2024 contract posted a weekly high of 493 per bushel on Monday last week, prior to posting a weekly loss of 22 cents. The trade appears less concerned about U.S. planting delays and may now view the lack of drought as a bearish item. Private groups estimate that fund traders sold 35,000 contracts from Wednesday through Friday last week.
Ugly stuff. So we saw a 22-cent loss on the week, and it was actually uglier than that because you peaked at some higher prices on Monday last week. It's early June, so late May, early June. What are you trading? You're trading weather, and I think that part of the rally that we had through the last half of April into May, I think a lot of it had to do with planting delays and the idea that things were really wet, and it presented a degree of uncertainty. And now the uncertainty, at least regarding the planting situation, appears to be going away, at least the way the market's acting. I know there's still a lot of unplanted acres. I know a lot of acres were planted in less than ideal conditions. But for the moment, the trade seems to be of the opinion that, you know what, soil moisture has been recharged. You're going to see a planting progress number 90% or better this afternoon. So, yeah, there's going to be some prevent plant, and there's some stuff that was planted in less than ideal conditions. But the market sees this as being a bearish situation for the moment. So you had your I'll call this a crop scare event to some extent. It was a crop scare-ish event. Could you run into another one in June or July if you run into a hot and dry forecast? Yeah, you absolutely could. But for this go around, it appears to be over.
CFTC released weekly commitment of traders data on Friday. During the week ending May 28th, the funds were net sellers of 16,000 contracts of corn, funds were net buyers of 16,000 contracts of soybeans, and the funds were net sellers of 5,000 contracts of SRW wheat on the week.
Again, CFTC updates their information. They give you the report on Friday, but the data is accurate as of Tuesday. So this stuff is 3 or 4 days old by the time that we get it. These numbers are drastically different in real time in all likelihood. Private groups estimating that funds are probably short 170,000 contracts of corn in real time, probably net short 17, 18,000 contracts of soybeans in real time, probably net short close to 50,000 contracts of SRW wheat in real time. So the funds never got long anything. They maybe in real time could have been long soybeans for a second, but it was never printed, and now they're back to the short side. When you look at the three combined, 165,000 net short corn, soybeans, and SRW wheat as of last Tuesday. And again, that number's got to be past 200,000 net short in total at Friday's close, I would imagine.
So if you guys have not checked out our premium content, you need to do so. Joe, can you tell me about some of our premium videos last week?
I thought we had some good stuff last week. I did a video 2 years ago on my personal investments. Where do I put my money? And it's what I do is drastically different than what most of our subscribers do because a lot of our subscribers are farmers, got a lot of money in farmland. I'm not a farmer, so I have money in different places. And I think people like transparency and just plain real talk. Most people won't tell you where their money is or how it's set up exactly. But I felt like it was a good review. I had some requests to do it. And Friday, we did Social Media Circus. We had Matt Bennett was on. We had some real talk when it comes to grain marketing, how actually difficult it really is. I think there are some people that would lead you to believe that marketing is easy, and it's not. It's incredibly difficult. That was one of the many items we discussed. Pete Meyer did our Sunday pre-open weather update yesterday, and he will be doing these throughout the month of June and into July. So as the weeks progress here into June and into the month of July, the weather come Sunday night is going to be hugely important. And these are videos that you're going to want to watch. They go out at 6 p.m., an hour before the markets open on Sundays. We'll be doing those for another 6 weeks or so. If you guys want to see the premium stuff, sign up today. Go to standardgrain.com. This is a $50 per month subscription. You can cancel it at any time. There's no other fee. There's no other obligation. Nobody will try to sell you anything else. This is the best way to support the YouTube channel and to support the podcast. We make like no money off of that stuff. Premium subs are the only way that we're able to wake up and do this every day. We put a lot of free information out, but our paid stuff is fantastic. And if you want some more details on what we're doing, you want some more stuff regarding grain marketing, strategy, weather, policy, we have new stuff out every single business day. Give that deal a shot this morning, guys.
The U.S. radar is active this morning. Early morning rain fell over parts of Minnesota, Wisconsin, and northern Iowa. A smaller system is working its way through parts of western Kansas. Rain is expected to continue throughout the Corn Belt through Wednesday and Thursday. The 6 to 10 day government forecast favors odds of below normal precipitation for much of the central and western Corn Belt. May was among the wettest on record for parts of Iowa, western Kentucky, and Tennessee.
So here's that Iowa State map, and this is the numbers that you see on the screen is the ranking out of the last 132 years, one being the wettest. So in parts of Iowa, it was a 4, meaning it was the 4th wettest May of the last 132 years. Look at Western Kentucky and where I live in Middle Tennessee, super wet, like the 1st, 2nd, 3rd, 4th wettest of the last 132 years. Illinois, not as wet. Indiana, not as wet. When you combine April and May, it looks different and it's wetter in some areas. But I think that the area of concern right now is a lot of Iowa, that north central, the northeastern pocket in particular, where it's been extremely wet.
U.S. corn export sales declined last week. Net corn sales were reported at 32 million bushels, down 11% from the previous week and down 2% from the prior 4-week average. Mexico was the largest corn buyer for the week. Net soybean sales were reported at 12 million bushels, up 18% from the previous week, but down 5% from the prior 4-week average. Unknown destinations were the largest buyers for the week, and net wheat sales reductions of 2 million bushels were down substantially from the previous week and from the prior 4-week average. Italy was the largest wheat buyer for the week.
We've got an export demand problem with soybeans in particular, and we've talked about it every week. The book of new crop U.S. soybean export sales is the worst since 2005. China still has 0 new crop soybeans purchased out of the U.S. and 0 new crop corn purchased out of the U.S. The book of corn sales in total is not as bad as soybeans. It's below average, and it's way below average if you include 21 and 22, but it's not as bad looking as this soybean deal. USDA in their May report, when they gave us the first balance sheet, they're projecting an increase in U.S. soybean exports in the new crop marketing year, which seems very far-fetched given the book of sales. It's early. Could China come in and be super aggressive and catch up quickly? Yeah, they absolutely could. I can't help but wonder if there's a reason here. I mean, the obvious one is that U.S. beans are overpriced. They're cheaper out of Brazil. I mean, that's the obvious one. Is there some political stuff here? Also, are they worried about the Trump presidency and tariffs and political type stuff? Maybe. My personal thought is that it's just a pure pricing deal. I don't know that they're worried about politics, but maybe you can't say without a doubt.
Speaking of China, the country is slowly increasing imports of sustainable agricultural products. On Friday, Chinese state-owned food group COFCO received its first cargo of deforestation-free soybeans. The 50,000 metric ton shipment of Brazilian beans was valued at $30 million. Beijing's recent policy shift, which aims to achieve carbon neutrality by 2060, is expected to stimulate Chinese demand for sustainable goods. However, the price of such imports remains a hindrance. Sustainably sourced soybeans can cost $2 to $10 more per ton. Because of this, volumes aren't anticipated to account for even 1% of imports.
This is absolute nonsense. They're buying deforestation-free soybeans from Brazil. You want to hear some statistics? Since 1970, 270,000 square miles of the Amazon rainforest have been destroyed in Brazil. And that accounts for, in the modern era of agriculture in Brazil, they've deforested 17% of the Amazon. And China's buying, in quotes, deforestation-free soybeans from Brazil. So this is absolute nonsense. There's no science here. Cool story, though.
OPEC Plus is expected to slowly curb its voluntary production cuts. On Sunday, the group agreed to prolong its cut of roughly 2 million barrels per day until October. The cuts will then be gradually phased out over the following 12 months. The production cuts have helped keep crude prices above $80 per barrel this year and were originally set to expire at the end of this month. The reduction in cuts is expected to add 750,000 barrels per day to the market by January. OPEC Plus also agreed to extend its daily crude output cap of about 39 million barrels per day until the end of 2025.
Crude oil prices have been a big disappointment to the commodity bulls. we've been really sideways in like the 70s to low 80s. Hasn't really done much. I know there were people who were talking reinflation event, bullish commodities, that sort of stuff, and it has not played out. Here's the Bloomberg Commodity Index. Here's an update. We had kind of a failed breakout on this chart, at least the way I draw the lines, and now you're kind of reverting back into the pattern. So not quite what the commodity bulls had been hoping for. What did cattle do last week?
They were lower. Feeders closed an average of 204 lower on Friday, and for the week, feeders were an average of 257 lower. Live cattle were an average of 116 lower on Friday. For the week, live cattle were an average of 270 lower. Cash cattle trade took a step back for the first time in 6 weeks last week. In the north, cattle traded at 190, which was $2 lower from the previous week. In the south, cattle traded at 186, which was $1 lower from the prior week. And boxed beef prices, they actually moved higher last week. Choice closed Friday at $313.20. That was up $336 for the week. Select closed Friday at $301.71. That was up $1.63 for the week.
Outside markets on Monday, U.S. dollars about flat. Stocks are mixed. Bonds are up a little bit. Crude oil is down 19 cents in the July WTI at 76.79. Have a great week, guys. We'll talk to you on Tuesday.